From all of us here at MySeniorVenture.com, we appreciate you spending some of your time learning about long-term care, and thank you for considering the important decisions being made to protect your loved ones as you age. Learning the facts and beginning to truly understand the financial, mental, and physical aspects of caregiving will provide you with a more clear understanding of the ripple effect created by one member of the family needing long-term care. The difference between being prepared and not being prepared can be vastly different. Over the next several minutes, we will answer the most critical questions being asked by those wanting to learn more about long-term care and how you can best plan for unforeseen health events. These are the questions we will review together. What is long-term care, and should you or your spouse anticipate a long-term care event in your lifetime? Where is long-term care provided? Who pays for long-term care? What does long-term care cost? What is long-term care insurance? What is covered by long-term care insurance? When should I buy long-term care insurance? How much coverage do I need? Can I just wait until later to buy long-term care insurance? Should I purchase long-term care insurance through my employer if it's offered? And lastly, what are the risks without long-term care insurance? Again, thank you for spending a few minutes of your time with us today.
So let's get started. What is long-term care? Long-term care is the assistance you receive if you are unable to care for yourself in a prolonged illness or disability situation. Long-term care differs from traditional medical care in that medical care services rehabilitate or correct certain medical problems, while long-term care services help a person maintain his or her lifestyle. Long-term care typically becomes needed as part of normal aging, but can also be due to illness such as multiple sclerosis, stroke, arthritis, or Alzheimer's disease. An indication that people need long-term care is the inability to perform routine activities of daily living, such as dressing, bathing, eating, continence, toileting, or transferring. There are also common indicators that can be measured to determine if long-term care assistance is necessary. Things like housework, managing money, making financial decisions, taking medications, preparing and cleaning up after meals, shopping for groceries or clothes, using the telephone or other communication devices, and lastly, caring for pets. Few people anticipate losing their ability to maintain their own independence. However, with life expectancy increasing, our chances of needing some help at some point are greater than ever. So now that we understand what long-term care is, let's talk a little bit about where is long-term care provided. People often think of long-term care as taking place only in a nursing home, but the term actually refers to a variety of private and semi-private care situations and services, such as care in your own home, adult daycare, assisted living facilities, nursing home or hospice facilities. Skilled nursing facilities, often called nursing homes, provide the most comprehensive range of services, including nursing care, nutrition management, and 24-hour supervision. It is important to know that family members may often assume the burden of care, which over time may have a significant impact on their lifestyle, finances, personal and work commitments, and their physical and emotional well-being. These types of care can be very costly. The need to pay for a long-term care event can dramatically change the financial position of your healthy spouse and deplete any assets that were planned to be passed to your family. So now that we've talked about where long-term care services are provided, let's talk about who pays for this type of care. Many people mistakenly believe that the government or their health insurance will automatically cover their long-term care needs. However, long-term care assistance isn't typically paid for by health or disability insurance, and there are many stipulations that have to be met before any government assistance can be made available. In addition, government programs such as Medicaid aren't designed to cover long-term care costs over long periods of time. In fact, Medicare does not cover custodial or long-term care. So the question really becomes, how do you pay for these services? First, and likely the preferred way, is with a long-term care insurance policy. The exact coverage depends on the type of insurance you buy and what services are covered. There are numerous ways to design a policy that will meet both your needs and your budget. A much less preferred way is to receive help through Medicaid. Medicaid is covered primarily based on income and assets of the individual requiring care. And in most cases, after a person who requires these benefits passes away, the state must try to get whatever benefits it paid towards that person back from their estate. It is important to note, people who are eligible for Medicaid have to reduce their assets first. There are rules about what is covered as an asset when determining Medicaid eligibility. You can't simply give your assets away to family members or non-family members rather than use your assets to pay your nursing home care. If you give assets away within 5 years prior to the date you are applying for Medicaid, or even after you apply, the gift may be treated as a transfer of assets for less than fair market value. You would be wise to seek advice on this topic from an attorney who specializes in these areas. Now, Veteran Affairs may also be an option for some. The VA may provide long-term care for service-related disabilities or for certain eligible veterans. The VA also provides some at-home care in certain circumstances. It is important to know there might be a waiting list for a VA nursing home. Other options may include coverage through a life insurance policy, your health savings account, or HSA monies, or lastly, a reverse mortgage. A reverse mortgage is a type of loan used by homeowners to convert the equity in their home into money. As you can see, there are many different ways to manage the cost of an unexpected long-term care event. The key is to be aware of the programs and planning tools available to you before you need the care. Next, we'll take a look at the cost of long-term care. So we've discussed who will pay or who may not pay for long-term care insurance. So what does long-term care actually cost? The cost of long-term care varies greatly depending on the type of services provided. Skilled services such as nursing or therapy will cost more than support services such as homemaker help or personal care. Generally, home care services can be provided at a lower cost than a nursing home facility. The 2012 MetLife survey revealed that the national average daily rate for a private room in a nursing home is $248 per day, while a semi-private room or shared room is $222 a day, up from $239 and from $214 a day, respectively, in 2011. Also, the national average monthly base rate in an assisted living community rose from $3,477 in 2011 to $3,550 in 2012. And the homemaker rate increased 5.3%. As you see from the cost, the question isn't always, can you afford to have long-term care insurance? It's, can you afford not to? Now we're aware of the financial cost. Where are we going to get the money to pay for this? So what is the long-term care insurance role in paying for this type of risk? Long-term care insurance is provided by private insurance companies to help pay for an individual's long-term care expenses. Depending on the plan you choose, it may pay part or all of your care. Long-term care insurance is a cost-effective way to help protect assets against the high cost of long-term care. Long-term care insurance policies are not standardized like Medicare supplement insurance, since each policy is different with different choices and benefits and coverage. A long-term care policy has these basic features: an elimination period, the period before benefits begin, typically ranging from 0 to 100 days. A maximum benefit period, or a payout period, ranging from 1 year to lifetime benefits. A daily benefit, usually ranging from $50 to as much as $250 per day. There are several ways to acquire long-term care insurance, such as purchase an individual policy, receive coverage with a group policy sponsored by your employer, enroll through membership in an association, as part of a life insurance policy, or through an annuity. It is important to consider long-term care insurance when planning your retirement. Unexpected long-term care costs can quickly deplete savings and destroy your financial plans. It is best to purchase long-term care insurance when you are younger and healthier. Premiums for these plans increase with age, and costs are also adjusted based on health risks. So your chances of paying less are better the earlier you purchase. Statistics show that the majority of people across America are buying long-term care insurance in their mid-50s. It is our recommendation that most should consider long-term care insurance. This should be done by speaking with a long-term care specialist. This would be someone that specializes in this particular insurance and has focused their career on senior products. You should expect the specialist to be very knowledgeable and to look at your specific circumstances and best match the need with the appropriate amount of coverage. So now that we've discussed the basics of a long-term care insurance plan, let's talk more about what is covered by long-term care insurance. The most common services covered by long-term care insurance are home health care services, which must include skilled care and physical therapy; personal care in your home, which may include some homemaker services such as running errands and housekeeping; adult daycare services; assisted living care; and nursing home care. Other services offered by some policies include hospice care, respite care, care after a hospital stay, and also caregiver training for family members. Remember, long-term care insurance is designed primarily to protect your family and to give you access to quality services without depleting your assets. An important question in long-term care planning is, when should I buy long-term care insurance? When it comes to long-term care planning, there are two reasons you need to address your future needs sooner rather than later. The cost of long-term care insurance is based primarily on your age and health when you apply for coverage. Therefore, the younger and healthier you are, the more affordable your insurance policy will be. The coverage you buy for your future can also help protect you today. If an accident or illness were to occur when you were relatively young, owning a long-term care insurance policy would ensure that you have the coverage you need. Also, if you wait to buy a policy, a change in your health could leave you ineligible for coverage. By being proactive in your 40s and 50s and purchasing long-term care insurance, you can help reduce the uncertainty of later years and maintain control over important care decisions, your assets, and your family's future. If you can't buy as much coverage as you think you need, consider buying an affordable plan now and enhancing it later when your financial situation improves. So what does a long-term care insurance policy cost? Premiums for long-term care insurance can range by several $100s a month to several $1,000s a year. The cost is determined by the amount of coverage you purchase. Whether you determine you want to cover all costs associated with the care or only portions of the cost, it will make a significant price difference. Long-term care insurance companies determine premiums based on several factors. Elimination period. The longer you can pay your expenses before the company begins paying the benefits, the lower your premiums will be. Geographics. Long-term care costs may vary greatly from one area to another. Where you live will affect the cost of your coverage. There are dozens of ways to build your policy to best meet your physical, mental, and financial needs. Remember, long-term care insurance isn't necessarily designed to remove 100% of your risk. It's important to determine with your financial planner how much of this risk you want to move to the insurance company and how much of that risk you want to leave on your own assets. Using that style of planning will help reduce and make sure that you have the most appropriate cost for your care possible. So we've talked a lot about how much does the coverage cost, but the real issue here is how much coverage do I really need? And the simple answer to this is you need as much coverage as you can comfortably afford. Keeping in mind that some long-term care coverage is certainly better than not having any at all. When thinking about your coverage option, it's important to take the following into consideration. First, the level of assets you want to protect. Use only a long-term care specialist to help you design an asset protection plan, customized to your own personal needs and affordability. Second, consider that the cost of care varies by location. If you're interested in moving closer to loved ones, consider that the cost of care varies by state and by region. Where you reside is important in determining the amount of coverage you will require. And lastly, inflation protection, because the cost of care is likely to rise. Purchasing an additional inflation feature can help your benefits increase over time. So remember, the easy answer to how much coverage is enough is simply, how much can I comfortably afford? This is an all too common question. Can I just wait until later to buy long-term care insurance? Delaying the purchase of long-term care insurance can often be a financial disadvantage. Just any one of the items we will discuss can increase the premium of your policy. However, the combination of 2 or more items on the list can have a multiplier effect on the premiums and very likely will double the price of your policy. If your health is not stellar, insurance companies can charge you more for the same level of coverage. If you already need long-term care insurance, companies will consider you uninsurable and prohibit you from purchasing a policy. If long-term care continues to rise at the same rate, you will need to buy 5% more coverage every year you delay your purchase. As you grow older, insurance companies charge more for the same level of coverage. Some states have minimum purchase requirements for their partnership programs. Insurance companies can raise premiums for new enrollments by 10 to 30% based on past claims experience. Keep in mind that based on your current age and health, the cost of long-term care insurance will never be more affordable than it is today. Should I purchase long-term care insurance through my employer? Many employer groups offer long-term care insurance through the benefits offerings. If you're fortunate enough to work for an employer that offers this important coverage, it is wise to consider electing this insurance. Before doing so, it is recommended that you take time to educate yourself about the benefits of the policy and compare your employer coverage to what you're able to qualify for and purchase on the open market. Employer offerings may be more restrictive than the individual plans. However, generally group plans are easier to qualify for since they ask fewer qualifying and/or medical questions. In some cases, you may even be offered guaranteed coverage as an employee if your group is large enough in size. Generally, the coverage you purchase through the group offering is portable, meaning you're able to continue the coverage if your employment ends with the employer where you purchase the coverage. If you have the ability to purchase long-term care insurance through your employer group, it is wise to strongly consider doing so. Take the time to compare the coverage being offered through your employer versus the individual plan on the open market. After doing so, make an educated decision regarding which plan or carrier is right for you. The last topic we will discuss will assure you clearly understand the risk you face without having long-term care insurance. Currently, a skilled nursing home will cost about $71,000 per year. By 2030, these same nursing homes are expected to cost $190,600 per year. And by 2060, it will skyrocket to more than $250,000 per year. Assuming the average stay of 2.6 years, the average nursing home bill in 2030 will be close to $500,000. Most people in America are not prepared for this risk, and very few can afford to self-fund it. At the same time, your risk of needing long-term care is high. The probability of becoming disabled in at least 2 activities of daily living or being cognitively impaired is 68% for people age 65 and older. While Americans are living longer, they're not necessarily living healthier. Plus, the prevalence of cognitive impairment among the elderly has increased dramatically over the past decade. Currently, 22% of people over age 85 are in a nursing home, and about half of those over age 85 who are not in a care facility require some assistance. Being prepared early on will decrease the devastating effects of not having the means to pay for long-term care and risking your hard-earned savings. So to wrap up our time together, we want to again sincerely thank you for spending a few moments with us. We hope that you have found value in the information and that what we have talked about will better help you and your loved ones prepare for the unknowns ahead. Please remember, when it comes to being ready for long-term care, one thing is for certain. The best time to create a long-term care plan is today.